Hello students, welcome back to the another session of the wonderful program Pass Thawanu Panchamrut organized by the HB Kapadia group of schools in collaboration with GSTV. You might have seen my first session. In that session, we had a discussion about a paper pattern and the blueprint of the subject accounts. In this session, we will be thoroughly discussing about the most important, high weightage yet very easy chapter of accounts. Yes, chapter number 3, company final accounts. Why this chapter is so much important? Because in this chapter you just have to remember only 2 tables, and by the understanding of these 2 tables you will be easily able to get 11 out of 11 marks. So this chapter is very important for the students who do not want to pass only but also want to get 100 out of 100 marks. So let us begin. Students, in chapter number 3, company final account, you have to prepare 2 statements. Yes, I am talking about statements, not ledgers. There is a difference between statements and ledgers. In final account of partnership firm, we were preparing ledgers, but in the company final account, we have to prepare statements. What is the difference between ledger and statement? In a simple words, I can say that ledgers are prepared horizontally, whereas statements are prepared vertically. You have to keep this thing in mind. Ledgers includes debit side and credit side, whereas statement is written vertical wise, no separation of debit side and credit side. You have to keep this thing in your mind. Please do not mix up with partnership accounts and company final accounts. In partnership final accounts, please prepare ledgers, and in company final accounts, please prepare statements. Okay? So let us talk about our very first statement, balance sheet statement. Okay? For the students who want to get 100 out of 100 marks, you should be very particular regarding the heading, the head of this statement. Please do not write balance sheet only. You have to write the full sentence. Balance sheet statement of particular limited. Here I am using ABC Limited. Whatever company's name is given, you have to write the name of that company. So balance sheet statement of AB Limited as on 31st March 2021. Okay? If they are asking about 2022, so you have to write 31st March 2022. If they are asking about 2019, you have to write 31st March 2019. So be particular regarding heading for the students who want to get full marks in accounts. Remember, if your heading is not appropriate, a paper checker has right to cut half or 1 mark from your heading. So be particular regarding your heading. Okay. Now talking about the columns. Here we have 4 columns. Remember, no debit side or credit side. We have to prepare statement that is vertically. Okay. First column is of particulars. In that column we have to write the name of all the particulars. Okay. That we will discuss thoroughly. In second column, note numbers are given. See students, in general, company final accounts are prepared along with notes. These all items are heads. These are not actual items. These all items are head, and under these all heads, numerous items are there. So it is not possible to cover up all the items in one balance sheet. Therefore, notes are prepared for each and every item or each and every head. But in 12th standard, preparation of notes is not included in your syllabus. Still, you are supposed to prepare note number column. Okay? Though no any number will be written in note number column, this will be blank, but you are supposed to prepare note number column. Okay? Then you have to prepare 2 columns of amounts. Okay students? So let us thoroughly discuss the whole balance sheet statement. See students, the whole balance sheet statement is segmentized between 2 heads. First head includes equity and liabilities. Second head includes assets. There is no huge difference between partnership final accounts and company final accounts. There is a little difference, and if you will understand the difference, so it will be easy for you to remember this balance sheet. Okay? In the previous balance sheet of partnership accounts, liabilities and assets heads were there. Here equity and liability heading is there and assets heading is there. In equity and liabilities heading, we have three subheads. Equity means the amount of capital invested by shareholders. Okay, so the first segment is named as equity and liabilities, in which we have to mention the fund of our shareholders as well as the fund of our stakeholders. Stakeholders means the external parties which are interested in our business and which have invested in our business. Okay. So let us understand the first head, shareholders fund. Okay. In shareholders fund, generally two items are there. Number one, capital. Number two, reserve. In any business organization, owners have two things. Number one, capital invested by them, and number two, reserves created from profit. Okay. So in the first head, in shareholders fund, two items are there. Now, how to remember which two items are there? So, I have written a short initial SR. S stands for share capital, R stands for reserve and surplus. Okay, students? Next, now talking about share capital. In share capital, generally in the whole textbook, whenever share capital is mentioned, only an amount is given. No any other thing related to share capital is given, only share capital is given. In reserves and surplus, all the reserves are created. So we have discussed about shareholders fund. We are taking a short break over here. After the break, we will be discussing about non-current liabilities and current liabilities. Stay tuned with us. Welcome back to the wonderful program Pass Thawanu Panchamrut. Before the break, we had discussed about shareholders fund. Now let us discuss about non-current liabilities. Okay, three items are included in non-current liabilities and four items are included in current liabilities. Why I am discussing these both items simultaneously? Because there is no any huge difference between these two items. You have to write this initial. You have to remember this initial only, BPO. B stands for borrowings, P stands for provisions, and O stands for other liabilities. Okay, this BPO will be there in current liabilities also. Only the difference is here borrowings are of long term and here borrowings are of short term. Okay, so in non-current liabilities we have three headings: long term borrowings, long term provisions, and long term liabilities. In current liability, again we have the same initial BPO, means short-term borrowings, short-term provisions, other short-term liabilities, and one more heading, trade payables. By the trade, the amount which is payable is known as trade payable. And trade payable includes only two items, creditors and bills payable. Okay, students, so this is the whole format of equity and liabilities. The second heading is of assets. Includes two subheads, non-current assets and current assets. Non-current assets are those assets which are with firm for more than 1 year, and current assets are those assets which are with firm for less than a period of 1 year. Now let us talk about non-current assets. Which items are there in non-current asset? To remember these, you have to use the keyword FILO, F-I-L-O. F stands for fixed assets, includes two types of assets, tangible and intangible assets. Intangible assets, land, building, plant, machinery and furnitures are included, whereas in intangible asset, goodwill, patent, trademark, copyrights are included. Next, non-current investments are given. The investments which are made by the company for more than 12 months are known as non-current investments. So all these non-current investments are mentioned over here. Then long-term loan and advances. Remember students, if I am holding a company, I will never give any amount of loan to any other person, but rather than I will invest that amount in my business only. But sometimes I have to give a loan to my most valuable thing, that is known as employees. So whenever we are lending a loan should be lent to employees only. Okay. Sometimes we have to give advances while we are making a contract. So such kind of advances are come under the head long-term loan and advances. Then other non-current assets. Generally other non-current assets are not given in the sum, but remember the fictitious assets, or I can say that the deferred revenue expenses comes under this head. Now talking about current assets, we have to remember only 6 initials. SIT, CSO. C stands for current investments, I stands for inventories, T stands for trade receivables, C stands for cash and cash equivalents, S stands for short-term loan and advances, O stands for other current assets. Okay. Now how to remember this? See students, investments and loan and advances are given in non-current assets as well as current assets. Only the difference is in non-current assets it's are of long term, and in current assets they are of short term. Okay. So this is the whole balance sheet of company's final accounts. Now you have to remember some points while you are preparing balance sheet. You are not supposed to write the whole balance sheet in the exam. Before starting the sum, just prepare the columns. This is the main head, equity and liabilities, and this is the main head, assets. In this I have put 3 subheads with red highlight. The points which are red highlighted, you have to write these points only before starting the sum. You do not require to write the details which are mentioned under the red highlighted points. You just supposed to write the heads which are red highlighted. After preparing balance sheet, you have to write the main heading, equity and liabilities. Now in equity and liabilities you have to write 3 subheads. Number 1, shareholders fund, non-current liabilities, current liabilities. You do not require to write the items which are given under the red highlighted heads. Same as like you have to write number 2, assets. In assets you have to write 2 subheads. Number 1, non-current assets, and number 2, current assets. Now in all these 5 red highlighted points you have to remember the sequence 3, 4, 5, 6, 7. Leave 3 lines after shareholders fund, then leave 4 lines after non-current liabilities, then leave 5 lines after current liabilities, leave 6 lines after non-current asset, and then leave 7 lines after current assets. In that particular lines your whole balance sheet will be fitted. Another thing, if we are talking about an amount, all amounts will be written in the first column only. No amount will be written in second column. All amounts will be written first column only. After the completion of balance sheet, the total of all the heads, will be written in second column. Means the first you have to write share capital over here, reserves and surplus over here, and the total of share capital and reserves and surplus will be written in second column. Likewise, the total of all the heads will be written in the second column. The total of these 3 columns will be of equity and liabilities. The total of these 2 columns will be of assets. Remember, total of equity, liabilities and total of assets should be same. If your balance sheet is not tallied, don't worry, you will be given marks for your entries. Here we are taking a short break. After a break, we will thoroughly discuss profit and loss statement. Stay tuned with us. Thank you. Back to the wonderful program of Pass Thawanu Panchamrut. Before the break, we have thoroughly discussed about the balance sheet statement. Now we are discussing the second statement, profit and loss statement. This is the whole profit and loss statement which we need to understand. Remember students, profit and loss statement is a mixture of trading account and profit and loss account. You have to keep this thing in your mind. This is the collaboration of trading account and profit and loss account. But this is also a statement, so it will be also prepared vertically, not horizontally. Here also debit and credit columns will not be prepared. Okay. The whole profit and loss statement divided into two segments. Number one, income. Number two, expenses. The income and expenses are written over here under their heads. After deducting expenses from the income, we will get profit. And from this profit, we have to deduct tax. Then we will get profit after tax. Now let us discuss the incomes and expenses thoroughly. The main source of income for any business organization is sales. So the first item included in the income is revenue from operations. Operations means that operating activity for which we have started our business. So whatever sales are made during the year will be written over here. Generally, only sales are given, but if sales return is given, you are supposed to deduct that amount of sales return from sales. Okay? After mentioning sales, you have to mention the other incomes. Discount received, rent received, commission received, or profit on sale of any asset will be written in other incomes. The total of income will be termed as A. Then you have to focus on expenses. Remember students, here you cannot change the sequence of expenses. But let me give you clear-cut idea how to remember this sequence. These first three expenses are related to trading account, and rest of the four expenses are related to profit and loss account. So you can segmentize all these 7 expenses as first 3 of trading account expenses, and remember 4 expenses are of profit and loss account expenses. The main source of expense for every business is purchase. So here we are writing purchase. You just have to remember our old trading account. If you will keep in mind your old trading account, you will easily prepare these 3 expenses. In old trading account, purchase was there. Here also we are writing purchase. In old trading account, opening stock was there and closing stock was there. But the thing is that opening stock was written on debit side and closing stock was written on credit side. Here we do not have debit side or credit side. So instead of mentioning opening stock and closing stock, we have to take the change which is taken place during the year between these two stocks. So here the second heading is of change in stock. From opening stock you have to deduct closing stock. Remember students, as per example, if opening stock is given of 10,000 and closing stock is given of 8,000, you have to write 2,000 over here. But if opening stock is given of 8,000 and closing stock is given of 10,000, you have to write minus 2,000 over here. You have to write 2,000 in brackets. Do not have to put a sign of minus as per the new board guideline. Okay. Third is direct expenses which are related to purchase and factory. Carriage inward, wages, etc. are written over here. So these 3 are of trading account expenses. Now these 4 expenses are of profit and loss account expenses. In that expenses, the very first expense is employee benefit expense. The expenses by which employees get benefited. Okay, the most relatable expense considering this fact is salary, by which employees get benefited. Then bonus, then contribution to provident fund, etc. are written under the head employee benefit expenses. Next heading is finance cost. Finance cost means the cost which is incurred to bring a finance in the business is known as financial cost. Let's suppose if we have taken a loan, so interest on loan is financial cost. If we have issued a debenture, then interest on debenture is finance cost. If we have taken a loan, then interest on loan is financial expense. So these kind of expenses are mentioned. Apart from that, bank charges are also considered as finance cost. Next heading is depreciation and amortization. Decrease in the value of tangible assets is depreciation, and decrease in the value of intangible assets is amortization. So you have to keep this thing in your mind. If depreciation is given, we will write over here, but if any write-off amount is given related to goodwill, patent, trademark, copyright, or any other intangible asset, that also will be mentioned over here. At last heading is of other expenses. Those expenses which do not come under any head will be written over here. Say for example, audit fees, rent paid, printing and stationery, etc. expenses will be mentioned over here. So income and expenses headings are completed. We have discussed all the incomes and all the expenses. Now you have to deduct all the expenses from incomes. The total of income will be termed as A, total of expenses will be termed as B. If we will do A minus B, we will get profit. As a company, before distributing dividend to shareholders, we have to pay tax to government. So from this profit, we have to deduct the tax. For this, we have to make provision of tax. So deduct the amount of provision of tax from the total profit. Now you will get profit after tax. I hope you might be clear regarding profit and loss statement. One more thing, whenever you are writing the names of all the expenses, you have to leave at least 2 lines. Likewise, balance sheet, you do not have to write only these 2 headings. You have to write the whole expenses over here, and you have to leave 2 lines for each and every expense. Then your profit and loss statement will also become inadequate. Now let us talk about adjustments. In company final account, only 2 adjustments are there. Number 1, closing stock. Number 2, provision for tax. Closing stock will be written in as change in stock, and on balance sheet asset side as current assets. 2 entries will be made of closing stock, and 2 entries will be made of provision for tax also. First entry, as you can see, deduct from profit. Second entry, balance sheet liability side, current liabilities as short-term provisions. So I hope now you have clear-cut idea regarding this chapter. In the next session, we will discuss the tips to success in accounts. Till then, stay tuned with us. Thank you so much.